Hello and welcome to the next edition of Bachelor Trades. I am Gordon Eckler, your host, Geckler on Twitter. This week, week of the 21st, July, we had Amazon, and boy, EPS. This was a terrible number out of Amazon. We came in here looking for 54. We got 45. The street does not like misses in this environment, and they got punished in the after-hours session. Give you a little bit of insight on the expectations. Revenue came in at $6.5 billion. The street was really looking for a better number, both on revenue and EPS, due in part to Amazon Web Services and Amazon Kindle, which are high-margin products. And the street wildly underestimated the capex associated with these two, the marketing costs, etc. However, the stock was absolutely punished right away. Within 20 minutes, we were trading basically 24 bucks down, 26 bucks down. I'm seeing Amazon come down here at 103 by 105, and I'm thinking, man, there's an opportunity here for a bounce. I was going to wait for it to bounce first. But this was my game plan. Get in and above 101, add if it hits 100, and add once more at 99.5, and stop out below 98. And I communicated as much in real time on Twitter. And my feeling was I drew a fib right away from where I thought it was going to bounce. And I also, my thesis was the conference call wasn't until 5 or 6 o'clock. The point was it had not started directly at the close of the market, so the company hadn't had an opportunity to come out and defend themselves. And historically, Amazon has been very great with handling analyst calls and assuring the market. And so I gave them a little bit of a benefit of the doubt that there was going to be at least a sizable bounce, because this was a huge miss, and this was a huge reaction. So we come along here and we get Amazon bouncing for me, and I drew these fib levels. The target was 105. I actually put in my order, as you can see. Well, first of all, this was the fib with the price action at the time that I posted after I had exited the first time, but basically my levels were 105. That's all I was looking for. Just a bounce to the 23.6, the first intermediate fib level. A lot of people use the 38.2 level, but I keep this intermediate level in because it often responds to that level. Anyway, I had my order in on Amazon at 104.98, right above that 95 to sell out. I went big on this trade. I put block orders in on Sigma X. And I also added some odd lots in my personal account, but for my fund and for client accounts and my own personal my share of my personal LP, I went big on this trade because I felt I could risk 2% on it and potentially make 6, and that's a nice 3-to-1 risk reward ratio, and maybe I'd keep some. A small portion overnight for a gap up. So that was my thinking. And lo and behold, we had a nice bounce to 105. I got sold out right at that 98 for most of the position, and I kept a quarter on for the overnight after hours action. And as you can see, had a nice gap up to 108 and responded just beautifully to these fib levels. And as you can see, market opens up, and we all know what happened to Amazon the next day. I sold out the rest of it right around the 50% fib level at 110, and bought some later in the day and sold out at 115. I was absolutely surprised at the explosiveness of this move, back basically closing down $1 after touching 100 in the post-market session the day before. However, I largely did not participate in the upside the following day. I got the low-hanging fruit on the early bounce, and I was first in line early, actually a buck early on the bounce, but I'll take it. So that was the trade of the week. But what I want to highlight is a strategy that I missed, but that I noticed that we can use in the future, and that has to deal with the SIBO's new weekly options. You can go to sibo.com/weeklies, take a look at those. Several issues now have weekly options, and there's going to be more and more coming online next quarter and throughout the years to come. And obviously, you want to look, the strategy is to look for companies reporting on a Thursday where weekly options expire on a Friday. Because basically, any move to the upside or downside following a big earnings beat or earnings miss is going to have extremely volatile action, and basically going to offer a situation where you can make a lotto ticket type trade and participate with some leverage greatly to the upside. I'm not advocating this style of trading for any sizable amount of money, but as you'll see on this potential trade you could have done, we'll look at a table of and chart of these possibilities here. These were the weeklies. If you use the fib levels, right, as your guide, once you started seeing a bounce of the strikes, right, 115 and a 110 is your guide. When you came in first thing in the morning and saw already a gap up, a little bit of a pullback, and some support at this fib level at 105, right? You could have targeted the 110 level and the 115. No one in their right mind really would target 120, but you didn't need to, because look at what the 110, the 115 weekly options, what the range was. These things opened up at 5 and 10 cents respectively, right? Hit a low of a penny and 10 cents on both. Hit a high of $9, right? And 410. We're talking about a 9,000% return. Obviously, you can't get 1,000 at 10. At a huge lot at 10 cents, right? To make a big enough bet to make this crazy. But do the math on just 200 of these options, right? I mean, that's an insane return for very little risk. In terms of real risk, not percentage risk or volatility risk, but just the fact you throw a little lot out there and you get a huge return. So that's something to look at, because look at these charts coming in here on the week. These are the weekly options. These are the 115s. That was a big number. You could have even gotten in here, and used those fib levels as a guide, and caught a double by the end of the day. Again, caught a double here. If you were early, look at the volume came in here. So market makers obviously made some huge cash on these. So that's something to remember for future bachelor trades. Use your fib levels on retracements, and target those weekly options on companies that report on Thursday and give you a number that the street likes or really does not like. But again, a very memorable transaction in Amazon. Got me a nice 4.5% on a huge lot immediately, and some more the next day. So stay tuned for next week's bachelor trade, and thank you for watching.